Hello, everyone, and welcome to Latinas and Power. My name is Marilyn Alverio. I am the CEO and founder of Latinas and Power. And if this is your first time joining us, what we're about is to inspire, to motivate, to encourage, and to provide tools that support and enable Latinas to succeed as leaders and as advocates. We are 20 years old next year. What started out as a very small network has grown throughout the country and in many parts of throughout the world. So part of what we do is to provide information to our audience. We partner with some of our sponsors to be able to deliver very critical information, and that is what today's Lunch and Learn is all about. First, before I introduce the panel to you, I want to make sure that you reserve a spot on June 1st of 2023, which is our 20th annual conference in Hartford, Connecticut. It is a hybrid conference, so we do have it streaming live. It is going to be in downtown Hartford, Connecticut. We have a lot of surprises in store for you there, so I hope that you follow us on all of our social media platforms to stay tuned. We will be showing those social media platforms again, but you can also get them on latinasandpower.com. I'd also like to mention that we're working on a programmatic initiative called the Latinas in Leadership Institute, or Lilly. And we are having a lot of success in building out our hybrid institute. So that is another initiative that we hope that you will stay in touch with us, because we plan on launching it in September of 2023. Before I move on, I'd also just like to mention, as a Boricua, as a Puerto Rican, there is a devastating situation in Puerto Rico. If there is any opportunity for you to participate in local efforts, I encourage you to do that. So today we are going to be talking about credit building, an extremely important topic. And when I presented the idea to one of our sponsors, Liberty Bank, they were able to put together a presentation. And also we're going to be able to allow for you to ask questions, whether it's during the presentation or at the end of the presentation. So with that, I'd like to introduce our panel from Liberty Bank. Pamela Days-Luketich, and she is the Vice President of Community Development. Fanita Borges, AVP of Mortgage Loans, and Pamela Hippolyte, who's the AVP also of Mortgage Loans at Liberty Bank. If I made a mistake on anything, I hope you all will correct me, but I would like to thank you first of all for putting this presentation to us together. And I'd like to first invite Pamela Days to kick us off.
Hi, everyone, and welcome. Thank you, all of you, for taking time out of your busy schedules to be here today with us and to take the time to really empower yourselves. How can we make good decisions without knowledge, right? We need to know things so that we can make the best decisions and have these awesome tools in our tool belt. And so today, by learning more about credit, you are going to have a tool to help you be more financially successful. I did this program earlier in the week, and I'm really still sad about one of the people in the audience. She was really eager to learn. She's listening, but I could see some sadness in her eyes. And after the class, she came up to me and said, you know, I thought I was doing great. I was paying all of my bills on time. Life was good. And during COVID, I lost my job. 75, so I'm just living on my Social Security. Times got harder. I got a bunch of credit cards. I started using them a little by little. And next thing you know, I ended up with huge balances on all my cards. So I went to the bank because I own my home and I thought maybe I could get a home equity. And my credit score that was 800 at one time had dropped to 500 because I could no longer make my monthly payments on my credit cards. So I wasn't eligible to get another loan. and I don't really know what to do. Where can I turn? If I had only known some things prior to falling into this situation. And, a lot of us are living with just one step away if something happens to having some financial hardships. So by you all being here today and learning about credit and learning about what credit can do for you and how to be prepared will help you to avoid situations like this. Now, I'm sure this person that was at this class is going to be fine because she is out there now. She's attending classes, she's going to agencies, she's looking at every resource possible, and she's going to get back on her feet. But hopefully today we can give you some good knowledge so that you will be building your credit and working so that these things don't happen to you. And if you do have a situation, you'll be able to deal with it quickly. So what is credit? Credit is your ability to borrow money with the understanding you're going to repay it later. And that's where a lot of people get into trouble. They don't think about the repayment part, right? I'm going to school, I'm going to get a bunch of loans because I want to get my degree. But it's still really important to remember that even though we're going to be going to school to better ourselves, when we get done, we have to pay that debt back. And if we don't pay it back, it's going to hinder us from moving forward and reaching our goals. So always really thinking before we borrow money. And what we want to do to have positive credit. So say you did get those loans and now you're like, I'm not going to pay those back. I just can't afford it. It won't matter to me. I'm not going to get any loans. Well, it will matter to you because credit is used for a lot of other things in your life. When you go to get insurance, you go to get auto insurance, they pull your credit and your insurance rates are going to be lower the better your credit is. When you go to rent an apartment, your landlord is going to pull your credit. And of course, if you need to borrow money, if you need to increase your education and get more loans, if you want to buy a home someday, or you need an auto, having good credit is going to make a big difference. The other thing that a lot of times people forget is when you're going to get a new job, your employer a lot of times will pull your credit because by having good credit, they feel you are more responsible and you're going to be a better employee for them. So one of the first things we can do to make sure our credit is good and that we're heading in the right direction is to take a look at our credit reports to understand what's on there and to fix any problems that might be on there. So I'm going to turn things over to my colleague, Fanita, who's going to fill you in on that.
Thanks, Pam. So talking about your credit report specifically, let's talk about that. What is your credit report? Your credit report is a detailed summary of all your current and past debts, and they get reported to the 3 different credit bureaus, which is Equifax, Experian, and TransUnion. And it summarizes your repayment history. Your credit score is a little bit different. It's a number that each credit bureau assigns that's based on the utilization of the debts that are reported to that specific credit bureau. And it allows the lender to quickly understand your credit history, which is why sometimes people will ask questions like, why is my credit score different from Experian to Equifax or TransUnion? Because I know a lot of people use different sources to see their credit. But your scores will be different because not every single debt that you get, like a credit card, may not always report to all 3 bureaus. So there are differences in how you utilize your credit that will adjust your credit score. Checking into your credit to get a free credit report. That's something that we should do on an annual basis. Look through the credit report, go to the specific website. There are others, but you can go to www.annualcreditreport.com so that you can get a copy of your credit report and see what's on there. And it'll show you what's called a tri-merge. A tri-merge credit bureau report is when you're able to see all 3 bureaus and what they're all reporting, because like I mentioned, not all debts are reported on the same ones. Next slide. So what is on your credit report? Let's talk about that. Your credit report is actually going to show historical identity information. It'll show your name over the years. It'll show your addresses, any name changes that you've had, or even address changes. Places where you've worked even will show up on your credit report. Your date of birth comes up there, your social security number. So these are important identifiers that you want to make sure are accurate when you do visit your credit report for free, or you check on it. The most important part of your credit report, in my opinion, is that your debts are going to show up there. All your repayment history is going to show up. So it's going to list your current and your past debts. It's going to show your bills and your monthly repayment amount. It's going to show the balance of every single debt that you have. And then it'll also show the limits to every single credit that you have. Like, for example, on your credit cards, it'll show what's the limit, it'll show what's the balance, and it'll show what your monthly payment is, as well as how you've repaid them. If you've paid them every 30 days on time, if you've paid them every 60 days, it'll show all that information on there. Your credit report is also going to show one of my favorite topics, if you co-sign. If you co-sign for someone on student loans, if you co-sign for someone, maybe you know someone really well and you co-sign for them on a car, that'll be considered your debt as well. Anything that you co-sign for, you are 100% liable for that obligation. So that's something that's important. When you go to get debt, the lender is going to also look at the monthly payments for those debts. Another favorite topic that I have is student loans that show up on credit reports, because your student loans, while they may not be in repayment status at the time, some lenders have to actually allocate for your student loan payments, because you may be looking at a debt that's going to be 10 years or 20 years or 30 years. So the lender will have to calculate for all of that. And they're going to want to know, what will the payment be? So even if there isn't a payment assigned, because I get that a lot, people will say, oh, but I'm on deferment right now. But the lender will have to look at that debt over a long-term period.
Fanita,
The other thing, please, Marilyn.
Yeah, there is a question about student loans. And so what about when the repayment of the student loan takes place? Is that then reflected on the credit report?
Yes.
That is questions that just came in for you.
Absolutely. Absolutely. I get a lot of questions about student loans and how that appears. So your student loan debt will show up immediately on your credit report as soon as you obtain the debt, just like any other debt. So even though you may not be paying it, it's going to have a payment associated to it, even if it's in deferment. If it doesn't have one and it's blank because it's new, we're still going to have to allocate a payment percentage for that, which is usually 1% of the student debt amount. Once you're in repayment, that will also show up, and it'll show your monthly payment obligation to that student debt, which it'll show the term, and we can see that it's a long-term obligation. But yes, it does show up. Thank you. That's a great question. Some other things that show up on your credit report are derogatory items, and they can be old ones. You may have medical issues that will show up there. You may have gone to the emergency room, 3 or 4 years ago, and for whatever reason, the emergency, it didn't show up on your insurance, or, it comes up as a $50 charge. Something as small as that can appear on your credit report. And it'll be considered a derogatory item if it doesn't get paid. So it'll show that months have gone by and it hasn't gotten paid. So that's one. Utilities, believe it or not, sometimes utilities like old cell phone companies will put, if you switched over to T-Mobile and you went from Verizon to T-Mobile, and let's say they have some penalty of charging you $800, it's not about me, this is about the session, but that happened to me. And, it showed up there that I switched over to T-Mobile and I didn't call T-Mobile within the 90-day period. So I had to rectify the situation. But these are things that do just pop up. Even utility companies, sometimes your cable company, if you didn't return all the equipment, that might show up. Anything that gets sold to a collection agency to further collect on that debt will more than likely appear as a collection item on your credit report. Another one of my favorite topics that I'll talk about just because is repossessions to vehicles. Oftentimes, people will get a car or a parent will help their child or someone, a family member, and the person can no longer pay the car. So the first instinct is to go back to where the car was purchased. And they'll say, hey, I can't pay for this car anymore. I don't want the vehicle. And sometimes, you know, if they are not careful and that particular car dealership doesn't come into some sort of agreement to pay them for that vehicle, the person just gives that dealer the keys back and says, here's the car, I don't want it. And what ends up happening is they didn't communicate with the financial institution where the loan was taken out. And now they have this large debt for that repossession that's on their credit report. So this has been a topic that has happened to some folks that, you know, may not understand English very well, don't understand parameters. And then they come in, and when I have to explain that this repossession that occurred 5 years ago is still on their credit report, and they say, I gave the car back. It doesn't work that way. You always have to talk to the lender that the loan was taken out. So that's something that's really important and has come up quite frequently, to my surprise.
And then it stays on for what, 7 years, right?
Yes, yes. And actually, and some creditors are not that good about removing things. So it really depends on the creditor to remove it. Because we even have seen situations where folks have documentation to prove that they paid the debt off, but the creditor for some reason did not remove it. So that has to be rectified.
The other, you know, something just happened to me recently where it was reported incorrectly.
Mm-hmm.
And then I was responsible for going back to the lender to say, you reported this incorrectly. And it took a good 4 months for them to actually send the letter to all 3 credit bureaus to say it was reported incorrectly. Even when they told them it was reported incorrectly, it still didn't happen. They still didn't fix it. It took a long time to do that. So, and
it's a process. It's a process even for a lender to, I mean, things happen, you know, mistakes happen. Sometimes people have similar names. A social security digit could be off. Something could appear on your report that's not even yours and you didn't even know it was there. Mm-hmm. But yes, it does become your responsibility, unfortunately, to do the legwork to remove it. And what you just said was a very important point, because a lot of times people think things can be done instantly. We live in such an instant environment that people think because they pick up the phone and make a phone call, next month it's off my credit report. And it doesn't work like that. There are 3 different bureaus: Experian, Equifax, and TransUnion. And they all have different time periods of months where they update data. And it can take sometimes 60 to 90 days for it to be full cycle and removed from all 3 bureaus. So it's definitely a process, and we have to be cognizant of what's on our reports.
And so that becomes really important, especially when you're thinking about buying a car, buying a home, even getting a new apartment, anything, getting a job, anything, that you go into your credit report at least 6 months before anything is going to happen to make sure that everything looks right. Because once they run that credit report one time, you know, it could mean the difference of you losing out on a great opportunity.
You know, Marilyn, I'll say that today, I honestly thought we would only have, you know, a handful of folks that would be on this session. And my understanding is that, you know, you had over 100 people sign up for this. It shows how important credit is. And one of the things that, you know, I'd love to drive home, if nothing else, is that that's tied to your social security number. Your credit report is extremely important. Credit is not something that you can just bypass. It is going to affect every aspect of your life. And to create generational wealth and personal financial stability, it's really important that, I know we focus on, hey, I'm going to get this job and I'm going to make all this money at this job. Or, hey, I'm going to sell this thing and I'm going to get all this money from this thing. And that's great because that does help to build immediate financial wealth. But to be steady and understand how important it is to where you are from a financial perspective, your credit is number one. Mm-hmm. You can't walk in at the mall at Christmas time and you want to get that Christmas card, that credit card to get a discount. It's not going to happen so quickly if you don't even know what the history is on your credit report and what your score is. So credit is essentially critical.
Right, and especially when sometimes you authorize people to run a report when you like get those last minute credit cards at the save 20% off if you get your credit card today and you're signing that. So, and sometimes you don't know that they're running your credit report. So there was a question that just came in from my Marlene James about how important it is to lock your credit report so that doesn't happen. So, because sometimes those credit reports get run and you don't even know about it.
Yeah. I'm glad you brought that up, and I appreciate that question, because another thing that I've seen happen is we'll go online, right? And you want one quick and easy application, and lowermybills.com, not to pick on them, all financial institutions have their practices, but lowermybills.com and those type of lending tree and some sites like that will often send out to multiple organizations, and then you have everyone running credit. It's like walking into a car dealership to get a car, and you go into the finance office so that they can help you, but they're actually running your credit 4 or 5 or 6 times, because every single institution that wants to lend to you to see if you qualify, they all have to pull your credit at the end of the day. So protecting your credit is really key. You can't just let everyone run your credit, and you can't co-sign for everyone either. That monthly obligation is going to be added to your debt. It's going to be added to what your ability to purchase something. So it's really important. I have a policy after I learned a long time ago, trying to be a nice girlfriend, and I co-signed for a boyfriend, very young and not so smart on that. And, I ended up burned after that, and I had to pay for that car while he drove around someone else.
So you're saying locking the credit report is a good idea.
Locking your credit report is really key. And don't co-sign. It's not about me, but don't co-sign. So yes, definitely.
The topic you're talking about right now, there's a lot of questions coming in, and I know we have a lot to cover, but one last question is really about accessing that report so that you know who's been running your credit, what it looks like, and does it, when you ask for your credit report, does it impact your credit?
So if you use the website, like to, that annual credit report, we'll put that up again, annual credit report, I think, .com. It's not going to pull, I think it's like free credit report is another one, but there's a few organizations where it won't damage or, pull a score and affect your score. It won't take points. Sorry.
This is one of them, the one you have up here.
Yes.
Yeah, this is the credit report that the government recommends, the site to go to, annualcreditreport.com. It's a pretty safe site. I haven't really heard of anything negative happening there. And when you log on, they'll ask you if you want to run one or all 3 of the credit bureaus. And so you have the option there to choose if you want to run one today, look at your credit report, and then in a couple months run another one. You can run all 3 once free for the year. And when you use this site, it won't impact your credit at all. And the other thing, when you run it, it will give you all the information if there's something wrong on there and you need to dispute. So say you found on there was a motorcycle purchase and you never bought a motorcycle. Has all the information right there that you can go to, fill out, and send it in to get that off of your credit report. So like Fanita said, it's very important to start checking these things now.
Absolutely. Thank you, Pam. Thanks for putting that up. So yeah, it also, and then the last thing that shows up on your credit report is anytime your credit is pulled, it will list that on your credit report as well to show who pulled your credit, because you want to be aware that if you didn't authorize that credit pull, you want to be able to go to that organization or that lender or financial institution and say, I didn't authorize that. And you can dispute that as well. And they would have to remove that. Again, it takes some time, but it can definitely be done.
Thank you. Thank you so much.
Absolutely. And then the next slide, just to kind of quickly go over your national, if anyone's wondering, what is the credit score? What is the national average on the Fico score? It's a 711 is the national average. I know some folks are in the 800s and that's fantastic, but the national average is 711. That's considered a good credit score. And FICO is the method used to calculate credit scores based on the information collected by all three credit bureaus. Again, Experian, Equifax, and TransUnion. And next, I'm going to turn it over to my awesome partner, Pam Hippolyte, and she's going to share how you go about getting that.
Thank you, Fanita. So we work with a lot of different nonprofit agencies. I'm not seeing my face, but it's okay. Nonprofit agencies, let's say a national one. I know that we have listeners from all over the country. A big organization like the Urban League of Greater Hartford or the Urban League, National Urban League, nonprofit agencies will be able to sit down with you and run a credit report. Most banks, if you're looking to go into an institution, will also run a credit report. Unfortunately, we're not able to hand that report over to you, but we certainly would be able to go over the report with you and discuss what's there. Credit card statements, I know I have a Discover card and it does show credit score on it. It is sometimes equivalent to what lenders are looking at. So, you know, we have to kind of gauge which entities we're looking at to look at credit scores. When you have a right to a score is going to be when you have been denied credit. So if you've applied for a credit card and you don't get the credit card, you have the right to receive a copy of your credit report that shows all three of the bureaus. FICO score is what, you know, in particular, mortgage lenders are looking at. The website that's there is a good source, and Advantage is also. Three national credit reporting agencies is going to be TransUnion, Experian, and Equifax. Lenders are looking at all three to determine oftentimes whether or not you're going to be approved. The next slide, please. What makes up a credit score? Oftentimes when I'm sitting down with clients, you know, we weigh very heavily on the score. A lot of times we're looking at, you know, what a good score is. As Fanita said, you know, 711 is somewhat of the national average. As Pam said, that the higher the score, the better the outcome. You know, a lot of people don't realize, yes, that, you know, when, in particular, if you're looking for a mortgage, when we're looking at insurance, home insurance is going to be higher if the score is lower, you know, which is going to affect your payment. Employment, you know, we want to make sure that your score is at a certain score. History of paying on time is first. You know, when we're running credit reports on a daily basis, I want to say at least myself, maybe 5 to 10 credit reports a day. When someone is late on their credit, and it's recent, that's going to drop the score the most. So history, meaning the length of time, the last 12 months in particular, is where we're looking to determine a better outcome of approval. How much of the credit limit is used? We've talked about this in this session, but it's very important that we only utilize 30% or less of the limit. So let's say we have a $1,000 limit. We want to use only $300 of that limit. We are issued credit all the time, but we're not told how to use it, and that's when we get into the difficulties that we do. So again, here's a credit card, but I'll run it up to the limit and then pay the minimum. That's not what should be done. Length of time credit, again, Marilyn mentioned, the 6-month window. If your goal is to purchase a house next September, we need to start now. Looking at credit, looking at what you might or might not have for credit. Opening new accounts within the last 12 months. So again, it's important to start looking now and then looking forward 12 months. A mix, yes.
Pam, you're bringing up such an important point right now. Opening up new credit cards, building your credit, because if you don't have credit cards, then that gives you a very low score too.
Yes.
And if you have credit cards, but you don't use them, that gives you a low score too. So
Yes.
it could get pretty confusing, So when you're saying, opening up credit cards, if you're planning on buying a home or a car or even renting a house, talk to me a little bit about that. That's one of the questions.
It's important to start now. We live in an instant world where we walk. I remember years ago, we walked in to get a cell phone and we had to wait a week. Now we walk in and we walk out. So planning for a mortgage, you should start now if you think that you want to buy next year, because it is a mix of different types of credit. So let's say you have credit cards, but you don't have an installment loan. That sometimes will appear where your score is lower. So you're going to need to have a mix of both.
So if you don't use the credit card, then that does impact your credit, right?
It does. You do need to use it. Two is if you don't use it, oftentimes the creditor, the credit card company will close your account. If they close your account, your score is going to plummet, because it's almost like the good history you had is no longer appears. So it's important to use the credit, but not to go over that 30%.
But then if they close the account because you paid it off, that also impacts your credit score.
It does. It does. Yeah. It's a lot to learn. Yeah, there's a lot to learn, and that's why everyone is here today. If you have, I say, and I usually counsel my clients, in particular because they're looking to buy a home, use 20%. Make sure, I know that either Fanita or Pam mentioned, make sure that your accounts are on auto pay, that you're paying at least the minimum, but be able to go in and always pay more. But make sure that you're within that 20%, rather than the national 30%.
Right.
A mix of credit. I'm sorry, Marilyn, go ahead.
No, go right ahead. I wanted to add.
A mix of credit. I want to make sure that we understand the difference between revolving, because we'll see that term. Revolving is just simply a credit card. It could be a Chase card, it could be a Liberty Bank credit card, it could be a Macy's card. So a mix of credit is making sure you have both credit, revolving, and installment. Installment would be a student loan, a car payment, or a personal loan.
And so we're coming back to this whole idea of how the credit, how your credit is getting reported. And there's a question from Carl, Kayla, or is it Kayla Carl? I apologize. So the different reporting agencies have different policies or different processes, as Fanita mentioned, right? So
yes,
you have your top three, but then you have Discover, Credit Karma are reporting a different credit score. So why is there such a big difference between some of these different groups reporting your credit? Like, which one do you believe?
Yeah, it is difficult. Not to pick on anyone, but Credit Karma, I find that, my clients come in, they sit down and they say, I've got a great credit score. Credit Karma says X. We go to run the credit and it's much lower. than it was. Different algorithms are pulling different things for different things. So for instance, if you're buying a car, it might be looked at differently, the way that they're running it. If you're buying a home, we're looking at it differently. You know, I'm not sure if Pam or Fanita know the answer why, but I know that they are pulled, you know, run differently.
Yeah, there are a lot of different credit scores out there, and it's really misleading because people think, oh, if I have your FICO score is going to be the same FICO score on your Discover credit card
Right.
statement, or that the bank pulls. But there are different algorithms out there for different types of credit scores. So FICO is basically the one the banks use, but there's also different models of FICO. So your Discover FICO score might say you're at 720, but the bank score might say 700. They should be pretty close. But Credit Karma uses the Vantage score, which is typically a lot higher. And that's why Pam was saying that it's misleading, because your score there looks, oh, I'm doing really good. But when you go to the bank, it's less. So just be really careful. There's lots of different scores out there. So the main thing that you can really do is make sure, if you go through your credit report and your credit report looks good, you paid your bills on time, you don't have any high debts on your credit card, your score is really going to reflect that when it comes to getting a loan or a mortgage.
So if we can just go back to that, either one of the Pams to answer this question from Laura Corcoran. We were talking about how closing a credit card does negatively impact your score, right? Whether you do it or whether a lender does it. Is there any situation where it wouldn't impact? Like, when is the best time to close it so that it doesn't impact?
Mm-hmm.
So what I tell people is, so if I'm not going to make any big purchases in the near future, and I don't really, care about, I'm not going to be getting a loan in the next few months, and I have a credit card that I haven't used in 3 years. I don't like that credit card. I don't want to pay the annual fee on it. I just don't want it. Go ahead and close it, and your score might drop a little bit, but it's okay. It will rebound, especially when you replace it with a card you like. But if you're going to be purchasing a new home, right, where every point counts on your score, hold off and don't close that card. Just keep it in the back of your mind. After I close on my home and I get myself situated, I'm going to clean up some old Macy's, Victoria's Secret, all those old cards that I purchased when I was young and crazy and want to get rid of them. So, keep that in your mind. You're going to do that eventually, maybe do it one at a time. But if you're in the middle of making a big purchase, hold off on that.
Okay. So what I would like to do, I know that you have more slides to cover here, and it's great information. And I hope that we're going to be able to share this presentation. But there's some questions that are real time right now that I think that the audience is very interested in, and I think that they're relevant. So if you could just bear with me while we try to answer some of those questions. One of them has to do with the hard inquiry and the soft inquiry. And I've always confused with, is it a hard inquiry? That's the bad one, and the soft inquiry is okay. That would be a question from Hartford, Connecticut.
Pam, or would you like?
So, okay, yeah. So the hard inquiries are the ones that the lenders will do. So when you apply for your mortgage, we're going to do what's called the hard pull or hard inquiry. And it could impact your credit score a little bit if you have a lot of people doing hard inquiries. So if Liberty Bank does one because you're applying for a mortgage, and then you go and you're getting a new car, and Ford Financing does one, and you apply for a credit card, those would all be hard pulls. The soft pulls are the ones that if you looked at your credit yourself would be considered a soft pull. Also, if you currently have a Visa card, right? Visa can check your credit throughout the year or the next year because you have a contract with them. But that's not going to influence your credit score. That would be considered a soft pull. They're just checking to see how you're doing. You're making all your payments. Maybe they're going to offer you a higher credit limit, and that would be a soft pull. It won't impact your credit score. If you're going to get a new apartment, the landlord, that would be a soft pull, them checking on you to see if you're a good candidate.
Okay. This next question is from Pauline Williams, and it is a good idea to continuously switch to the 0% credit cards when the interest rate is getting ready to go up. Fanita, I see you going like.
Because it's opening credit. That's a
Yeah.
hard pull. You know, it's a great banking tactic or a credit card tactic to have folks, you know, to switch over and entice you with that 0%. You know, if it sounds too good to be true, it probably is. So any kind of hard pull on your credit is going to drop your score. When we talk about if it's a negative impact versus a positive impact, what we're referring to specifically is it's going to remove points from your score. So if your score is 675 and you open up a credit card, the amount of points, you know, varies from lender to lender. And if they're doing one pull versus a tri-merge, which is all 3 pulls.
What if it's, I get these sometimes where you get from a current credit card, they give you a check that says, hey, transfer all your credit over for 0%. That's not a new credit card.
It would be for that lender to give you financing, they're going to have to do a pull. So, you know, if they're giving you checks, you either already have credit with them or they're luring you to use those checks, and they're going to then have access to do that,
And then that lowers your score.
Yeah. Yeah.
Okay.
Anytime credit is pulled, it lowers your score. Absolutely.
Next.
The
So
only other
one thing just to keep in mind with the 0%, because my daughter had a lot of credit card debt. So like, Mom, I'm going to put it all on this 0%. And one thing, it might be good to help you pay off your balances if you can transfer. But remember, it's probably only 0% for 12 months. So if in those 12 months, you can't pay off all that debt you transferred, that credit score, that credit interest rate is going to go from 0% to like 22%. And then you're going to be in big trouble. Okay. So you have to really look at the whole situation. And if you don't understand it, go, stop in your bank, talk to one of us, or, stop with one of the agencies that can help you.
That's what I was going to mention, was that we had talked about earlier where we can look at the whole picture. And if you're looking at the whole picture and in writing everything down and making sure that it is wise to use that check that we're talking about, it may be a good idea, but you got to look at the whole situation.
Okay, so we are running out of time. I think we needed more time for this. If folks want to stay on for an extra 5 minutes, that's probably when it's going to take for us to finish our presentation. But I don't want to let this question go by because it's so important for our young people. The question is from Nancy Borges, and she's saying, what do we recommend for the college student that's approaching graduation to establish a credit card? Because I mean, that's a real live situation right now, and we want to set them off on the right track and a right foundation. Who could answer that one?
I can take it but you guys jump in. So that's a really great thing to start your credit and start building it. So the college student, if they have some student loans, they're already building their credit just by having those loans, like Fanita had mentioned, even if they're not paying them back yet. And then looking to get a small credit card to start out. They could get a secured card, which means they're putting some money down first and like say 500 in an account, and then they can borrow 500, use it with their card. But they only have to charge their gas, $25, well, probably more like $50 now to fill up their car, and they can pay it off at the end of that month. and they'll be building credit. They do not need to leave a balance on that card. Just make one purchase, pay it off. Another great tip for the moms or dads that want to help their children, if they have good credit, they can make their college student an authorized user. So they can let them, their student feed off their good credit and be an authorized user on an existing card they have. The
Oh, and then
student
that
isn't, what's that?
then that helps the students' credit?
It helps them immensely. You wouldn't believe how much it can boost up their credit. The person that is, giving them the authorization has to have good credit, right? So if they had poor credit, it would negatively impact them.
Right.
But if they have good credit and they want to let them be an authorized user, they can put the limit they're authorized to just like $100. So
Right.
that
100.
the student can't go out and go nuts. But it will make a big difference on their building their credit score.
So I'm getting like people going, there's so many good questions here that what they'd like to do is bring you back just so that you can answer questions. I think that that's a great idea for us to set up some time for that again. And what I'd like to do, since we did run out of time, is for Pamela, Hippolyte, if there's any highlights from the slides that you had real quickly that you want to touch on as opposed to every bullet, and then we'll bring this to a close.
Sure. The unsecured credit card, which is something that a lot of people are not aware of, if you have no credit, or the student that we just talked about, again, taking $500 or $1,000, again, we still want to use the same practice of making sure we're only using 30% of the limit. Let's try 20. Credit builder loan, use the same way. So that might be something that people are not aware of, especially if you don't have any credit or have had some mishaps in the past and we've taken care of them. Now we need to rebuild and show that we know how to handle credit. So secure. Working with, go ahead.
No, I'm sorry. I know I want to be very conscious of we've run out of time. Is there any one last thought that you have, Pamela Lighthouse, on Hippolyte, on the slides that you have, something very important that they need to know?
Correcting any errors on your credit report is very important. Making sure that we're looking at all three of the bureaus and we have all of the history and that we're making any corrections. And try not to use the word dispute when we're wording what we're trying to do to make the correction errors.
Okay.
We'll talk about that. It's another topic.
Yeah. Okay, great. Well, you all have been invited back again. Everybody wants, they have a lot more questions. The City of Hartford's Treasurer's Office is on. We'd like to recognize Carmen Sierra, who is, the first Puerto Rican woman to become city treasurer of a major city like Hartford. She has her entire staff on, and congratulations to Carmen. And she's also said she'd like to partner with us for a continuation of this topic.
Awesome.
I would like to thank Liberty Bank and all of you for participating in this. Clearly, we need to continue 45.
It's a hot topic.
Not enough. And I'd like to thank everyone for participating from across the country. There's going to be some links in the chat. Any questions that you have, please feel free to send them over to latinasandpower@gmail.com. And what I will do is I'll send them back to the panel and we will make sure that we get your questions answered. And also Q&A has been on. Okay. And also there is a credit counselor information that you can get from HUD, from the National Office of HUD, that you can get some information there. Okay, so with that, I'd like to close and thank everyone for participating today. And everyone else, please make sure you follow us on our social media platforms to hear more about our upcoming programs. Thank you, everyone.